The Dow sank more than 550 points today. A Fed governor openly called for another rate cut. Bitcoin hit new 2025 lows, and Warren Buffett just made a multi-billion-dollar bet on Alphabet. Here's everything that moved the markets today. Meta. Seckers, 1.5. Welcome to Market Close Daily. After the bell, before tomorrow. Today is Monday, November 17th, 2025, and all data is based on the official U.S. market close. Markets opened weak and stayed under pressure throughout the session. The Dow closed near 46,590, down 557 points, or just over 1.2%. The S&P 500 finished around 6,672, down almost 1%, and the Nasdaq closed near 22,708, down about 0.8%. Small caps had the roughest day, with the Russell 2000 falling close to 2%. Interestingly, the 10-year Treasury yield drifted slightly lower to around 4.13%, which means this sell-off was not driven by rates. Instead, the weakness stemmed from shifting Federal Reserve messaging, stretched AI valuations, and a high-stakes earnings week directly ahead. Macro update. The biggest macro story today came from Federal Reserve Governor Christopher Waller. Speaking in London, he laid out what he called the case for continuing rate cuts, arguing that the labor market is slowing toward stall speed, inflation is gradually cooling toward the Fed's 2% target, and that another interest rate cut in December is justified. This stands in contrast to the more cautious tone coming from Fed Vice Chair Philip Jefferson and other policymakers who have urged patience. As of today, markets are pricing roughly a 40% chance of a December rate cut. At the same time, today's Empire State Manufacturing Index surged to 18.7, signaling unexpected strength in the real economy. The tension between dovish rhetoric, firm economic data, and skeptical markets created an uneasy backdrop that weighed on sentiment throughout the session. Megacap and AI update. The standout winner today was Alphabet. Regulatory filings revealed that Berkshire Hathaway built a stake worth between $4.9 and $5 billion, owning roughly 17 to 18 million Class A shares. That news pushed Alphabet up more than 3% and to fresh record highs. Meanwhile, Nvidia, Apple, and Meta all traded lower. A widely discussed note from Wall Street suggested that the market has already priced in nearly $19 trillion of value tied to AI, far ahead of what current economic activity justifies. This combination of Buffett rotating into Alphabet, major AI leaders pulling back, and analysts raising valuation concerns could signal early signs of leadership rotation inside the tech megacaps. Sector and earnings update. Hardware stocks were hit especially hard. Dell dropped close to the high single-digit range, Hewlett-Packard Enterprise slid around 7%, and HP fell roughly 7% after a major downgrade warned rising memory prices may compress margins heading into 2026. Nvidia also fell nearly 2% amid reports that large funds, including some high-profile investors, reduced their positions ahead of earnings. And that brings us to the week's major earnings slate. Home Depot reports tomorrow morning. Target reports Wednesday morning. Nvidia reports Wednesday after the bell. Walmart reports Thursday morning. With retail, AI, and consumer trends all in focus, this is a week where earnings could meaningfully shift market sentiment. Sector movers. Beyond tech. Looking across sectors, today's weakness went well beyond big tech. Energy stocks slid around 2% as crude oil prices dipped modestly, continuing a choppy stretch for the group. Financials were also down roughly 2%, reflecting concerns about the consumer, credit quality, and the broader macro path as the Fed debates its next move. Technology and materials sectors Both fell around 1.5%, with materials names and metals producers pressured by the risk-off tone and softer commodity sentiment. The one place equity investors found relative shelter was in communication services and utilities, which were the only major U.S. sectors to finish in positive territory. Alphabet's move helped lift communication services, while utilities benefited from their defensive reputation and stable dividend profiles in a day where traders were clearly taking risk off. Smart money. Two major smart money stories emerged today. First, Berkshire Hathaway's new multi-billion-dollar stake in Alphabet reinforces long-term conviction in the company's AI and cloud strategy. Second, Jeffrey Gundlach issued a warning that private credit could be the next major financial crisis risk. He highlighted rapid growth, leverage, and lack of transparency as structural problems reminiscent of early stages before the 2008 crisis. It's a reminder for investors to avoid opaque credit products and understand exactly what sits inside any income-focused funds. Deeper cuts and names to watch. If you look a layer below the headline names, a few individual stocks stand out as worth watching. Albemarle, one of the major lithium producers and a key player in the electric vehicle supply chain, gained a bit more than 2% and remains a useful proxy for long-term EV and battery demand. NextEra Energy, a leader in renewables as well as a large regulated utility, also moved higher and continues to sit at the intersection of clean energy growth and defensive income. On the other side of the tape, Coinbase's roughly 7% drop closely tracked Bitcoin's slide and underscores how sensitive crypto-exposed equities remain to every leg lower in digital assets. Lennar's decline of around 6% highlights ongoing fragility in housing-related names ahead of data releases and Home Depot's earnings, while Mosaic's weakness in fertilizers and Texas Pacific Land's drop in energy-linked royalties reflect broader pressure across commodities and natural resource plays. These aren't just random movers. They help tell the story of how investors are repricing risk across housing, crypto, and the broader commodity complex. Crypto update. Bitcoin continued its sharp correction, falling into the low 90,000 range and marking a new 6 to 7 month low. From its all-time high near 126,000, Bitcoin is now down about 27%. Despite that weakness, Michael Saylor's company added more than 8,000 Bitcoin over the past week, spending roughly $835 million and bringing total holdings to about 650,000 coins. This paints a split picture. Short-term traders are capitulating while large institutional buyers continue to accumulate. Even with those inflows, Bitcoin has yet to show a clear technical bottom. Trader ticker of the day, NVDA. Today's trader ticker is NVIDIA. Earnings arrive Wednesday after the close, and options positioning is pricing in a major move. NVIDIA slipped nearly 2% today, and several large funds have reduced exposure heading into the announcement. Expectations are sky high, and tomorrow's price action will reveal whether traders begin accumulating ahead of the print or continue cutting risk. Long-term ticker of the day, Google. Today's long-term ticker is Alphabet. The new $5 billion Berkshire position, a fresh record high, and Alphabet's strategic AI push across search, cloud, and YouTube all strengthen its long-duration investment case. The company's growing infrastructure commitments show it is positioning heavily for the next wave of AI demand. Investors should still weigh valuation after a strong rally, but today's news reinforces Alphabet as a core, long-term compounder. What to watch tomorrow? Looking ahead to Tuesday, several catalysts matter. A backlog of government economic reports continues to roll out, including industrial production, key housing metrics, and factory data. These will influence expectations ahead of the December 9th and 10th Federal Reserve meeting, especially after Waller's comments today. Home Depot reports earnings tomorrow morning, and the options market is pricing a potential move of 4 to 5%. Later in the week, Target, Nvidia, and Walmart will help shape the broader narrative on the consumer and the AI cycle. Meanwhile, Bitcoin sits on a critical support level. A breakdown overnight could pressure high beta tech and crypto-linked names into the next session.
S&P 500, gainers and losers. Under the surface, there were some clear standouts in the S&P 500. On the upside, Alphabet was the top gainer, closing up just over 3% on that new Berkshire stake. It was joined by Western Digital, which climbed nearly 3%, and Expeditors International, which gained close to 3% as well. Defensive and yield-oriented names also showed strength, with NextEra Energy, Albemarle, Consolidated Edison, Duke Energy, American Electric Power, Centene, and Johnson & Johnson all posting gains of around 2% or a bit less. On the downside, the biggest S&P 500 losers included Dell, down more than 8%, Expedia, off nearly 8%, Generac and Coinbase, both down around 7%, along with Hewlett-Packard Enterprise and HP, which fell in the mid to high single-digit range. Texas Pacific Land, Supermicro Computer, Mosaic, and homebuilder Lennar also saw declines of roughly 6%. The pattern there is important. AI-adjacent hardware, travel, crypto-linked names, and cyclicals tied to housing and commodities all took notable hits, while more defensive utilities and healthcare stocks quietly attracted money. Closing. That wraps up Market Close Daily for Monday, November 17, 2025. Stocks slipped across major indexes. Christopher Waller pushed for another rate cut, but markets remained divided. Alphabet surged after Berkshire revealed a multi-billion-dollar stake. Nvidia earnings are approaching with rising anticipation. Bitcoin hit fresh multi-month lows. Under the surface, we saw utilities and select defensives hold up, while hardware, crypto, housing, and commodity-linked names took the brunt of selling. And tomorrow brings a wave of key data along with Home Depot's results. This is Market Close Daily, after the bell, before tomorrow.